Hi, I'm Nadia.
And I'm Nicole, and welcome to the Wealth Twins channel.
Today we're going to tell you how you can build and protect generational wealth through trust funds. Trust funds will not only help close a widening wealth gap, they can also help you minimize taxes and prevent mishandling of your wealth.
So if this sounds like something you're ready to hear today, then hit the like button so we can get started.
Okay, so let's start off with what is a trust fund. A trust fund is a legal document that you set up so you can put assets into an account for the benefit of someone else. And that account is held and managed by a neutral third party.
A trust fund should be set up by a qualified estate planning attorney so you don't take the cheaper route, guys, and use tools that are online just to set one up.
Yeah. Now, there are different types of trust funds, but they can be separated into two categories, revocable and irrevocable. A revocable trust is a trust document created by an individual that can be changed over time while a person is alive. This is a living trust. An irrevocable trust is a trust that once it's set up, it cannot be changed or stopped without the permission of those that will benefit from it.
Now, both of these types of trusts are strong ways to control how your money is handled when you die or if you can no longer make decisions for yourself. However, an irrevocable trust offers more tax advantages.
Trust funds are ideal for generational wealth because they can put any valuable asset in a trust, okay, that you want to transfer from your name and to be used for the benefit of others. We're talking about money, stock, art, property, bonds, even a business. If you have it, you can put it in there, okay?
However, you shouldn't transfer things like your retirement accounts or your qualified annuities to it because those types of transfers to the fund would be seen as a withdrawal and be subject to the income tax rate that you would pay that year.
Besides what you can put in it, there are also three main ways a trust fund allows you to protect generational wealth. A trust can protect your assets from creditors and keep your information private. Let's say you just have a will. A will is a private document, and once you die, it becomes public, and it's a public record, okay? It also has to go through probate. Probate is the process of making sure what was stated in your will gets carried out accordingly.
Without a trust, anyone can use this now public record to look up how much you own and can actually fight for a part of your wealth. This contesting can be a headache for your family and can hold up and even reduce the amount of money you wanted to leave to your loved ones.
Yeah. Also, without a trust, creditors can come after your estate and be paid before anyone in your family, thereby reducing and locking up your wealth from your heirs. No one wants this.
Now, the next way a trust allows you to create and protect generational wealth is by lowering your taxes. Tax exemption is probably the main reason why people even set up trusts in the first place, specifically an irrevocable trust.
Yeah, when you move your assets into a trust, the assets are no longer yours. Since you no longer own these assets, you don't have to pay income tax on any of the money made from them.
That sounds good to me. Now, if you're in a high income tax bracket, you can actually use a trust to remove assets from your net worth and possibly qualify for a lower tax bracket.
Yeah, as an added bonus, if your attorney planned properly, those assets can be exempt from estate and gift taxes. If you want to take these trust advantages a step further, you could use a type of irrevocable trust that the ultra-rich 1%ers use, called a dynastic trust.
A dynastic trust. Now, a dynastic trust allows multiple generations to benefit from the tax advantages of keeping assets in a trust. Usually, a trust is just set up for your direct beneficiaries, like your kids. But a dynastic trust keeps those assets there and pays out in increments so that it keeps growing and helping future generations.
Yeah, dynastic has the word dynasty in it. Everybody's eating, okay? Each generation then gets a chance to grow the previous generation's money and then leave it to the next generation, which then continues to grow it. Trusts like this help the rich avoid certain taxes like the generation skipping tax and rules that are meant to redistribute wealth and stop the growth of assets from going on forever.
Dynastic trusts are actually one of the factors that is helping widen the wealth gap here in America. Did you know that since 1982, America's 3 richest families have been able to use them to increase their wealth by over 5,000%?
I can believe it.
Now,
right?
We're trying to tell you something we learned by making this video, and we wanted to make sure that you knew about it.
Yeah, get hit to the game. Don't be mad at the players because they've been doing it for years. Make sure you get in too, okay? The third way a trust can help you with generational wealth is by giving your beneficiaries a steady stream of income and ownership of valuable assets. You might have heard the term trust fund baby and think it's just a negative thing. It's not really, okay? But you will probably be surprised that many of the children who benefit from a trust actually use their money responsibly and don't just use the money to live a life of luxury.
So don't be fooled by the term trust fund baby, okay? If you feel your child would be irresponsible with your wealth that you work so hard to create, you can actually use the trust fund and put restrictions on the money that your child will receive from your inheritance.
Yeah, what is also cool is that a trust doesn't affect your children's financial aid or supplemental income like the ones given to those with special needs like SSI. If you open a custodial account at a bank like a UTMA and just start putting money into it for them, those funds would be considered part of their income and it can affect those payments and financial aid for if you want them to go to college.
Which we don't want to do, right? Now, although this may be a subject we all want to avoid, it's also something that we need to recognize should be done as part of being responsible with our wealth.
Yeah. Now, you've seen it in the news also when a celebrity dies and they don't have a will. But this mayhem can also happen in your own family if an important relative passes away. Confusion about where the money should go can make a family turn on each other exactly at the time where they should be helping each other.
If you think about trust as a way to protect your hard-earned money, shield it from taxes, and give it as an income to support those that you care about, you can see that trust funds are not just for the ultra-rich. Trust funds can be used by anyone who wants clarity around their money and want it distributed based on their wishes.
Yeah, question for you guys. Do you agree that anyone can benefit from setting up a trust? Type yes or no in the comment section.
Now, when it comes to setting up a trust fund, one of the drawbacks is the upfront cost.
Yeah.
Like we mentioned earlier, you should definitely use an attorney, specifically one who handles estate planning. It costs a minimum of $1,000 and up just to set up a trust, so you also have to plan for that.
Now remember, you get what you pay for, so make sure you find a good estate planning lawyer who is knowledgeable about setting up trusts and knows how to make them as tax efficient as possible. Do not take the cheap route here of doing it yourself online. It will only end up costing you more in the end.
What you can do on your own is familiarize yourself with the different types of trust funds available to you and have some idea of the things you want the fund to handle based on your individual needs and goals. That way, when you're finally ready to sit down with a lawyer, you aren't wasting time getting charged for an intro lesson, and then you can also simplify the planning process.
Yeah, these guys are charging you by the hour, so don't get charged for something you can do some research before, okay? In the end, trust funds are something that you should be thinking about as part of your generational wealth strategy, and we wanted you to know more about it. If you'd like to learn more ways about building and protecting your generational wealth, check out our generational wealth playlist that we linked at the end of the video.
Now remember, you spent the time to become financially literate, and as a result, created wealth that can not only benefit you, but your family down the line as well. Don't you want to make sure that they're taken care of?
If you are concerned with generational wealth, you should look into creating a trust fund. Now, if you guys found any value in this video, show these twins some love. Hit the subscribe button and share this with someone you care about.
See you in the next video.
See you in the next video.